Hey guys, here we are again. It's Trendy, and today we'll be discussing the MACD indicator and MACD crossover strategies. I know a lot of you guys are out there asking yourselves how exactly the MACD indicator works because you have false signals given by the MACD crossover. So we'll get started with the basics concerning the MACD indicator. We are looking at the euro today, spot price euro versus the US dollar, and we are looking at euro dollar really plummeting, and we're looking at the MACD indicator to help us support whether we should buy or sell. Okay, so we are looking at euro dollar for our chart right here. Okay, and we are also looking at the MACD indicator. So the MACD indicator stands for moving average convergence divergence. Okay, it consists of a 12 period exponential moving average and a 26 period moving average and a 9 period histogram known as the signal line. Okay, so let's just edit our MACD indicator here. Just want you guys to see the signal line. So we're just going to enlarge this. Okay, there you have it. That right there is called your signal line. When it's at 0, that is the signal line's at 0. Okay, so how do I use the MACD indicator to trade, and exactly how do I avoid false signals? The MACD indicator crossovers, as you can see, whenever that crossover occurs, traders tend to think that is a buy signal. When the 12 period exponential moving average crosses above the 26 period moving average, traders tend to think that is a buy signal, and that is where they get the false signals, because you're looking at this crossover here, it is in tune with that. If you were scalping the market, however, you would have gotten yourself a good number of pips and gotten out of that trade quick if you are a day trader. However, for our swing traders, they will look at that crossover and expect further upward momentum, because the histogram was also supporting that, usually building momentum to the upside. And then there was this crossover again that showed that that upside was actually a false signal. So how does a trader avoid that? Well, the MACD has what we call a staircase. Okay, so a staircase is created when the MACD either has higher highs or lower highs. So we'll look into that just now, or lower lows. So we're looking at this crossover here. It crossed over, but it failed to break above the signal line. So whenever you see a crossover and it breaks above your signal line, that is your buy signal. However, if it crosses over but it is limited upside, it is capped by the signal line, it fails to break past the signal line, that should show you that the bears are still dominating the market. So there'll be a lot of selling pressure pushing that price or currency, asset, stock, whatever you may be looking to trade, further towards the downside. Okay, so we are looking at this crossover here. Picture yourself standing here, okay, and you are walking down the stairs. As you're walking down the stairs, you walk lower below the stairs. So when you see these lower lows continue and price is actually in tune with the MACD staircase, that should show you that it's a continuation of the selling pressure. Of course, you'll have a lot of crossovers. If it crosses over above the signal line, that should tell you that the downtrend has ended. But as you can see with this example, with the euro versus the dollar, we still have a MACD staircase. Okay, so it's also true that you can trade a divergence. We'll also look into that. But let's see exactly what happens when you are trading the MACD and you are actually looking to buy. Look at US dollar and the Swiss franc. Okay, as you can see, we have a crossover here. MACD crosses above, okay, and it crosses above the signal line. Now, as you can see, a lot of bullish candlesticks were created, 4 of them, and this is a high here, and that high is supported by another high. So that should show you that the higher highs, the price is more likely to continue. However, it now crossed over below, and it's now pointing towards the downside. Is it time to sell? I think not. It has not crossed below the signal line. So whenever you spot a MACD crossover either above or below the 26 period moving average, always look at the signal line. Okay, the signal line is the confirmation exactly as to buy or to sell. So as you can see, we also had another crossover here, but it failed to break below the signal line. So you would click sell, and when you click sell, that happens. So that was a false signal. Okay, so you don't want that happening to you. So now you know how the MACD crossover actually works. So we'll look at trading a divergence. Let's look at the Canadian dollar. Okay, here we have US dollar and the Canadian dollar. Market price, when you're trading a divergence, your oscillators are doing the opposite of what the chart pattern is actually doing. So we have higher highs, okay, price is actually going up. However, the MACD, if you could plot a trend line on this, you can actually look at putting trend lines. It is actually lower, as you can see that. So price is creating higher highs, but the MACD or your oscillator, it could be your relative strength index or stochastics, are proving otherwise. So this shows you that this higher high is actually running out of momentum because it is creating a lower high right here, and eventually it becomes lower lows. And as you can see, there's a break below the signal line. So you can see that already that traders are already selling USD CAD. So they are buying the Canadian dollar and selling the US dollar. And that is how trading a divergence works. The same is also true when you have a downtrend and prices creating lower lows and then the oscillators creating higher highs. That should show you that that downtrend is bound to end at some point. And that's basically it. That is how you trade the MACD indicator. Do stick around for the wrap up, guys. We'll wrap up exactly how to use the MACD indicator. And thank you for watching. And watch the other video about the stochastic oscillator. Now, to book a free trading lesson, click on the link that you see right now and have fun with us. Visit currency-articles.com and we'll teach you all the tricks of the trade. Thank you.